Have you ever wondered if you're truly getting the best deal on your banking in Connecticut or New York? Are you leaving money on the table or paying unnecessary fees simply by choosing the wrong financial institution? In the world of personal finance, the choice between a traditional bank and a credit union can feel overwhelming. And when we talk about Connecticut and New York, specifically, where do local institutions like Patriot Bank stand in comparison to the collective power of credit unions? It's a question that deserves a deep dive, because the answer could genuinely impact your financial well-being. We're going to break down the key differences, analyze their offerings, and help you determine which one might be the absolute best fit for your needs. This isn't just about finding a place to stash your cash, it's about optimizing your financial life, whether you're saving for a down payment, planning for retirement, or just managing your day-to-day expenses. First, let's set the stage. What exactly is Patriot Bank, and what defines a credit union? Patriot Bank, headquartered in Stamford, Connecticut, is a publicly traded, for-profit commercial bank. It operates branches across southern Connecticut, specifically Fairfield and New Haven counties, and has a presence in Westchester County, New York, with a branch in Scarsdale. Like most traditional banks, Patriot Bank is owned by shareholders, and its primary objective is to generate profits for those shareholders. This profit-driven model influences everything from their interest rates to their fee structures and the services they offer. On the other hand, credit unions are a fundamentally different beast. They are not-for-profit financial cooperatives, owned by their members. When you join a credit union, you're not just a customer, you're a part owner. This cooperative structure means that any profits they generate are typically reinvested back into the membership in the form of lower loan rates, higher savings yields, and fewer fees. They operate under a people-helping-people philosophy, prioritizing the financial well-being of their members and the communities they serve. Credit unions are also federally insured by the National Credit Union Administration, NCUA, just as banks are insured by the FDIC, providing comparable security for your deposits. So, with these foundational differences in mind, let's start dissecting the key areas where Patriot Bank and credit unions in CT and New York compete. Accessibility and branch network. For many, the physical presence of a bank or credit union is still a crucial factor. Patriot Bank has a defined network of branches primarily in southern Connecticut and one location in Scarsdale, New York. If you live or work within close proximity to one of these branches, Patriot Bank offers the convenience of in-person banking. Their online and mobile banking platforms also provide widespread access to their services, regardless of your physical location. Credit unions, by their nature, often have a more localized footprint. Many are community chartered, serving specific geographic areas, employers, or associations. However, this doesn't mean they're limited. Through shared branching networks, a credit union member can often conduct transactions at thousands of participating credit union branches nationwide, offering a surprisingly extensive reach. For instance, if you're a member of a credit union in Hartford, Connecticut, you might be able to make a deposit at a credit union branch in Buffalo, New York, if they're part of the same shared network. This can be a significant advantage for those who travel or relocate within the states. It's crucial to check if the credit unions you're considering are part of such a network. Account offerings, checking, savings, and CDs. This is where the rubber meets the road for most everyday banking needs. Both Patriot Bank and credit unions offer a range of checking accounts, savings accounts, and certificates of deposit, CDs. Patriot Bank offers various checking accounts, including basic checking, regular checking, senior checking for customers 60 and older, and student checking for those up to age 23. They often require minimum opening deposits and may have monthly fees that can be waived by maintaining certain balances. Their savings accounts and money market accounts generally offer tiered interest rates, meaning higher balances might earn more. Patriot Bank also offers CDs with various terms, and their rates can be competitive, especially for certain relationship-based accounts or promotional offerings like their Founders CD for very high balances. For example, Patriot Bank savings rates currently show offerings up to 1.5% APY 4-star savings with balances over $100,000. And their CDs can go up to 4% APY for specific terms. Credit unions, on the other hand, often pride themselves on offering lower fees and potentially higher interest rates on deposits due to their nonprofit model. Many credit unions offer free checking accounts with no monthly fees or minimum balance requirements. Savings accounts, often called share accounts because they represent your ownership stake, tend to have competitive yields. For instance, some credit unions in CT and New York show savings rates ranging from 0.2% to over 2% APY for certain accounts or tiers. Their CD rates can also be highly attractive, with some credit unions offering APYs in the 3.50% to 4.00% range for various terms. It's common to see credit unions offer higher rates on smaller balances, which can be a boon for those who don't have massive savings. Loan products, mortgages, auto loans, personal loans. When it comes to borrowing money, the difference in operating philosophy between a bank and a credit union can become quite apparent. Patriot Bank, as a commercial bank, offers a full suite of loan products, including residential mortgages, commercial real estate loans, small business loans, lines of credit, and consumer loans. Their lending decisions are based on traditional underwriting criteria, credit scores, and debt-to-income ratios. They participate in Small Business Administration (SBA) loan programs, which can be beneficial for businesses seeking government-backed financing. Credit unions are generally known for offering more favorable loan rates. Because they aren't driven by shareholder profits, they can pass those savings on to their members. This often translates to lower interest rates on auto loans, personal loans, and mortgages. For example, some credit unions in CT and New York advertise auto loan rates as low as 4.5% APR for new vehicles and competitive mortgage rates. They also tend to be more flexible with loan qualifications, often taking a more holistic view of a member's financial situation rather than relying solely on credit scores. This can be a huge advantage for individuals with less than perfect credit or those who might not fit a bank's rigid lending criteria. Fees and charges. This is a critical area where credit unions often shine. Traditional banks, including Patriot Bank, typically have a comprehensive fee schedule that can include monthly service fees, overdraft fees, ATM fees for out-of-network machines, wire transfer fees, and more. Patriot Bank's general service fees, for example, include a $10 monthly dormant fee for checking accounts if no activity for 12 months and balance is less than $300, and a $35 insufficient funds fee. With that said, thanks for watching and until next time.